So it's the end of the summer and the beginning of fall. We're just heading into the Labor Day long weekend, and I wanted to give you an idea of what's happening with mortgage rates and also some of the trends that we're seeing in our office. So, one thing that we're seeing is that the bond market, remember, fixed rate mortgages are priced off of the bond market and yields are going up. And so what that means is that there's increased pressure on fixed rate mortgages. It doesn't matter if it's a 1 or 2 year term. They're also starting to see higher rates on 5 year fixed rate mortgages. And remember, the 5 year fixed rate or the bond market is a leading indicator. So it's forecasting what's going to happen with inflation in the future. The variable rate mortgages are priced off of the overnight lending rate, which the Bank of Canada often adjusts, and that's where you're seeing impacts on floating rate mortgages, on variable rate mortgages, lines of credit, and credit cards. So we are expecting that maybe the Bank of Canada will raise interest rates before the end of the year. Some economists are saying that they're going to remain steady. What I am hearing though from some of the sources that we follow regularly, and one of them is Edge Analytics, and they're also saying that there's going to be a trend where we might start to see some hopefully decrease in fixed rate mortgages at the end of 2024. Okay, so what do we do in the meantime? I have many clients who have fixed rate mortgages where the interest rates are probably going to be renewing in the next year or two. If you can, while the interest rates are low, make prepayments on the mortgage, just like we were recommending about a year and a half ago with your variable rate mortgage. If you have a variable rate mortgage, now is not really a great time to lock in. Just toe the party line, and if you can, keep up with the payments, right? Remember, we've had those conversations about what happens when rates go up. With a variable rate mortgage, rates will go up and they'll also come down. So again, it'll probably be at least another year before we see any rate decreases. One of the things that we are doing in our office is more private financing. So how I've had a couple of clients inquire about how private financing it works and how sort of who's lending the money. And if you're curious or you think you might be a good candidate or a good customer for a private loan, please give us a call because we work with a group of individuals who we've worked with in the last 20 years, and they lend money to people who own houses but may not qualify for a traditional mortgage. And some of the things that often come up are where they may not qualify is, for example, if someone is buying a property in a rural area that needs a bit of TLC, most lenders will require 35% down or more. Whereas if a borrower chooses only to put 20% down, they would be a good candidate for a private loan. If you've had income challenges or credit challenges just in recently, I am working with an individual right now, actually a family, who, through some job loss recently, have a good first mortgage. The interest rate is at 2.5%, but have run into some issues with debt and keeping up with their mortgage payments. And so what we're doing for them is we're doing a private second mortgage to consolidate some of their debt and access the equity in their house, with the idea that the co-applicant will find suitable job within the next couple of years. So it's just a good segue. The other time we do private financing is when somebody is building a house or has a big construction project. So that's another good way to tap into private financing. I am thinking that we will have some clients who have put offers on purchases and have not had a sale of home condition because the market is shifted slightly. And so we also do private bridge loans where there is no firm offer on the sale, where there is no firm offer on the sale, but they've already purchased a house. So these are some of the things that come up where borrowers need private financing. Now, The interest rates are quite a bit higher, but they're more shorter term loans and there often are fees associated with this. If you think you might be a good candidate or you've gone to your bank or you're in a situation where you might need some construction financing, please click on the link below and I'm happy to schedule an appointment with you. One of the interesting things, though, just to wrap today's message for you, is recently we have had clients who have had challenges with mortgage renewals or transfers. And what's happening is these borrowers are being dinged penalties when they should not be, even though their bank was notified that they were going to be discharged on the mortgage. So one of the things that you want to be careful of is if your mortgage is coming up for renewal and you'd like us to handle the renewal, you want to make sure that you notify your financial institution that you're going elsewhere and that your mortgage is going to be discharged because there are some serious system issues that lenders are experiencing. And then what's happening, and this is true across most of the major banks, a few in particular, um, but I just wanted to warn you about that. So if your mortgage is coming up for renewal, start early so you don't have any issues with being dinged a penalty because we can certainly advocate for you, but it's up to the financial institution that you're discharging the mortgage from to release you of that mortgage and not charge you a penalty. Okay, we are here to help. We love helping people. I'm so glad that you continue to tune into these messages and have a great long weekend. Thank you. Stay tuned for more information.